Welcome back to another video. In this video is going to be a strictly educational video. So we are going to be looking at how to spot fair value gaps as well as how to utilize them, because a lot of people rant about fair value gaps, and the thing is fair value gaps go by a lot of names. Understand? Some just call it a gap, some call it an FVG in short, some call it an imbalance. However, it all means the same thing. Understand? Some could spot an order block, two order blocks, a bullish order block and a bearish order block. Some could name it supply and the other one name it demand, but they are just talking about the one and the exact same thing. So that is where beginners should discern from. Understand that these people are just talking about one thing, but then it's important how to utilize these things. It's basically just as a tool. Understand, you have to use the tool in the correct and proper manner for it to work as efficient as possible, however way you want to use it. All right, so I'll just show you how to use fair value gaps and how to spot them, where to spot them. I'll tell you right now, don't move to smaller time frames to spot fair value gaps without a confluence. That is the biggest mistake people do. So it's important that you start from higher time frames, you get your bias. It could be a higher time frame fair value gap. It could be a higher time frame POI. A POI being an order block, S&T divergence, previous high or low, a sweep of the previous high or low, or a break of the previous high or low, to understand whether the market is continuing further or it's reversing, making it as a sweep of liquidity. These things are all important to understand. So now I'll just tell you about a fair value gap. So let's get straight into it. Okay, so what you do is, I need you guys to realize that this thing will happen almost nearly every day in the market. So firstly, this is an uptrend, as you can see right here. So this would be, okay, the trending market going up, right? A sweep of liquidity inducement, and then the market taps an order block. I did mention that usually valid fair value gaps move with order blocks, right? So this would be an order block. The market tests that order block, breaks structure, and then that's where it would leave the fair value gap. You place your fair value gap, your entry basically like this, right? And then your stop loss is below the low, targeting the previous high, right? Now the previous high wouldn't be a 1:1. In most cases it's a 1:5, 1:6. But what you're going to do is, let's just assume it's a 1:3. Yeah, let's just make this a 1:2. It's fine. Yeah, a 1:2 is all right. So what you're going to do is target a 1:2, all right? But for good, a 1:2, between a 1:2 and a 1:3, that's where you should take your trade and complete your take profit. Same thing happens when you're taking a short. All right, same thing happens when you're taking a short. There's the trending market going to the downside, sweeps liquidity, sweeps sell side, and then there's an inducement, sweeps buy side. The market tests the order block, breaks structure. Same thing that happened on the buying market, right? And then comes back to the fair value gap. From the fair value gap, this is where you enter. The fair value gap starts here, right? That's where the gap is. So you do the same thing. You place your sell, stop loss behind the previous high, and then you target the previous low. Again, a 1:2, take profit hit. It barely happens, however, when the market is consolidating like this. You shouldn't look to taking any trade whatsoever. When the market is consolidating like this, you shouldn't. However, you can introduce the power of 3 AMD: accumulation, manipulation, and then distribution. If you want to know more about that one, comment down below, and then I'll explain it in the next video. All right, so this will be accumulation, distribution, manipulation, and then distribution. Okay, but this is just consolidation straight up. So the market will sell liquidity, sweep liquidity, sell side liquidity, and then make a change of character by breaking this high, right? By breaking this high, right? Because sometimes the market does this. It sweeps liquidity, or maybe it just sweeps liquidity like this. So we are going to assume this high is actually much longer than that. All right, so it will be like this. The market sweeps these highs instead. All right, this is definitely not a change of character. The market will usually go down after that, but in this case we want a change in character after breaking that high. So the market will do something like this, changes character, retraces back down, back to your fair value gap, just like that. Right, and then when it comes there, what you do is you do the same thing. You place your trade from the beginning of the fair value gap, and then you target the previous high, just like that. You can make it a 1:2 to a 1:3, just like that. All right, now this would happen on another trending market. It's a selling market. However, the market doesn't sell liquidity. The market, in this case, it doesn't sweep liquidity. All right, so in this case you can see that this market is just making lower lows and lower highs, right, like this. As you can see, it's just making lower lows and lower highs. Sometimes the market would test an order block right here. It tests an order block, right, and then followed by a fair value gap or another order block, but then it's usually like this, right? An order block is right there, so let's make it OB, and then the fair value gap is just right beneath the order block. The fair value gap is just right beneath the order block. So like I told you, order blocks and fair value gaps usually go together. So you enter on the beginning of your fair value gap, stop loss behind the order block. You see it now, it changes. Instead of being the previous high, it becomes the order block that is responsible for the change in character. And then this is now just a trending market. The market makes continuous breakout structure, and then it continues trending down. This could be a reaction off of another order block, fair value gap, or it could as well would have swept liquidity anyway within this space on lower time frames though. But like on the 1 hour time frame, it could be just a trending market moving downwards to the side like that. Okay, so let's get a real chart example and let's see how that one goes. Now, glad to you guys that we have a current market that is currently playing out on gold right now, and as you can see, we have an order block indeed. All right, we have an order block right there, responsible for breaking, for breaking this low. All right, so let me just clean this out a little bit. So we have a breakout structure right here. Right, we have an order block responsible for breaking that low. So that is a breakout structure, as well as we have a fair value gap. Like I said earlier, like I really have to emphasize this. Know that the fair value gaps in most cases usually go with order blocks. So what you're going to do, since this is on the 4 hour time frame, you are not going to enter from the beginning of the fair value gap and your stop loss behind it, because that will be a very big stop loss size, all right, risk tolerance. But as you can see, you would have been in profit, however, right? So what you're going to do is wait for the market to come in either one of these two, the fair value gap or the order block, and then you go on the 15-minute time frame or any other lower time frame, and then you wait for a change in character. However, this does look like a change in character, but I'm not really liking it. Let's see how the 5-minute looks. Right, if I go back on the 5-minute, it does, however, look like it wants to change character. But then look, we swept buy side, sell side. It didn't break this low, because this low could be these two order blocks right here could be the reason it's currently buying. So it could actually buy and sweep above here. So we want to see a break down below this low. So we go back on the 15-minute time frame and see how that one looks. All right, so that's what we want. This is what we want to see, because right now it could actually go and sweep this as buy side liquidity and then come back and change character down here, and then we are going to find an entry criteria in the same way. All right, so you do not take every fair value gap you see. You need confluence. That is very important. You need confluence. So if I go back on the 1 hour time frame, I like to switch time frames just to see how the markets are behaving. So right here, I do need this low to be broken below. If it doesn't, we are not interested in selling. You see? So here's another chart example, a perfect one. Look at this one. Look at this. So I'm going to clean this, right? And I'm going to clean this because we're just still going to look at this. We have a fair value gap right here. A real life market, by the way. This happened during Asian session, I believe, somewhere there. If not New York crossover to Sydney or Australia session. Look at this. With a fair value gap, you place your stop loss right there, and then you target your 1:2. Perfect, just like that. Do you see a real life market? We have another one right here. Same thing happened. Understand? So now with multiple fair value gaps, you need to learn something called the ones that are in premium and in discount. The ones in discount are, wait, how do we explain this? Well, you have to use it, Fibonacci for you to understand it, but I'm not going to get into that. But it is what it is. For example, as well, right here we have another fair value gap, but you wouldn't have entered right here because you didn't get a confirmation. This is why I said this is why I said on the 4 hour time frame we do have a fair value gap, right? But we are not just going to enter because we do not have a confirmation that it is going to fall. That's why I mentioned that I need a sweep of liquidity with a change in character. Alright, so I'm going to go to a back testing software right now, and then we use previous market data to find a fair value gap and then an entry point that we are going to utilize to further explain and emphasize this strategy. All right. Okay, so here's the market right here, and we have a fair value gap right here on the 4 hour time frame. But like I said, on higher time frames, that is where you do not enter your trade on the higher time frame. You have to wait very patiently for the market to retrace. It's all right here again. We have a fair value gap. The fair value gap was there, the market retraced back into it, and then it shot up very high. As well, we have an order block right there. So what you're going to do is, this one has been mitigated already. It's a one-time use. We are now focused on this one. So what you're going to do is go on lower time frames, and then you wait for the market to retrace back within this area. So what we have right here, we have an order block right here. So I'll just place this one like this, right? Incorporate all those order blocks, and then we see which one the market respects. So we are going to wait for the market to retrace back within the zone, and then we look for an entry. I'll increase the speed up a bit. Is it gonna retrace? Okay, let's see. Okay. Oh, whoa. Okay, perfect. I ended up placing it too fast there. So right here we have a sweep of liquidity. Let's go on to lower time frames. I further explain. Sweep of liquidity, change of character. All right, now we need an entry. You see, I might have made a mistake of it. Oh yeah, shit. So now we need an entry. This would have been our entry actually. Okay, let me just leave it like that. This would have been our entry because we got a sweep of liquidity with a change in character. This is what we were waiting for all along. All right, but you can see that the fair value gap is being respected, as well as those. So you place your entry right there, stop loss on the previous low, and then now we target a 1:2. Let's see if that gets respected though. All right, let me place a 1:2. 1:2 is right there, so we would have been in the trade right now. Okay, Okay, as you can see right here, the market retraced nearly all the way back down. This is not a bad thing. Okay, so let me show you what we are going to do instead. So as you can see, it retraced all the way back down before it actually hit our 1:2. So what we are going to do is just wait a little longer, because we did get a sweep of liquidity to the upside there, so it might actually continue going up. We're just going to give it a few more, because you have to be patient here. The thing is, know that your trade, you're not going to take your trade out manually if it was not taken out by either take profit or stop loss. So the trade is still valid. Let's go. There we go. You see, the market retraced all the way back down, and then we did indeed get our profitable trade right there, as you can see. Should I go back on the 4-hour time frame to show you why we took this trade? There we go, further explanation. Because we saw that we had a fair value gap right here, but we wanted to wait for the market to retrace back within the fair value gap. As well, we had realized that the market tested this first fair value gap, so showing that the bullish momentum is still very strong. All right, so we went on the lower time frames to look for an entry point, right? So we went on the 5-minute time frame. That's where we went and found our entry, right? We were there, and then we realized that the market actually swept liquidity with a change in character. So then we placed our entry right here on the break that caused the change in character, which is right here. So now we had to wait patiently and then leave the market to play around. So we did. So the market did go all the way nearly our take profit area. But since we know that you do not have to take, or you do not take your trade out just because of market retracing back, you have to wait for your stop loss to get hit or your take profit to get hit. So we had to wait, and we waited patiently indeed. Eventually the market did hit our take profit area, confirming our bias that we were correct in the first place. All right, so this is the easiest way to do this thing. No overcomplicating it. There's literally only 3 boxes. The first one, second one for the entry, confirming the entry. This is the fair value gap that we reduced in size from the 4-hour time frame. The fourth box, this one, is our entry point. As you can see, we entered and the market hit our 1:2, and we are done. Just like that. That's all you need to do. Okay. And if you'd like to see more trading, in-depth strategies on this channel, please go ahead and like, comment, share and subscribe so that you get notified every time we drop another video, man. Alright, so we do have a community that we're currently building. You can go on my Instagram. There's Traders Economy right there. You can find the link in my bio for my Instagram. Alright, so see you guys another day, and comment down below what you would like to see, what other trading strategies you'd like further depth explanation on, and if here I explained it well enough for you guys to understand. So if it is so, please let me know in the video down in the comment section, and then I'll be sure to make another one.